Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid. Such a sucker, sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to another beautiful trading day, retail trading team. This is Mastro coming to you live with your routine briefing, where we discuss the day's most important price action takeaways. And boy, have we had a fun few days here. A couple days ago, we had the briefing where I said the top is nigh, and what does the market say? Well, nigh is not now, and that's what we're seeing so far today. So we are now in a state of very significant overboughtness, if that is a word, and you can see that reflected by this cool little tweet that you see on your screen right there. So big picture, definitely overbought, overextended, as we've been saying on this show for about 3-4 days now, since Friday, and we're just keep marching higher. So we're going to jump right into today and see what we got going on for intraday and looking forward, and we're going to start with our warm-up as we like to do. And before we do that, these are just kind of the main points for today. So right now we're obviously trending higher. Definitely a trendy look if you're just looking at the raw price action, yet I'm not seeing this reflected in the internals, and I'm also not seeing it reflected in the TPO. So right now we're trending higher, yet as the day moves on here, I would not be surprised to see a pullback. If we do see a pullback, there'll be swell, yet until then, you just have to respect the price action, which is definitely that bull run moving higher. We're well beyond the expected move so far, and when we get to the warm-up here, you can see just how close we are to an outlier move, and we'll see what happens as the day progresses once again. So what are we doing right now? We have broken, as of right now, above that October 13th trend line. We didn't really even have much of a pullback. So yesterday you saw kind of a pullback around that FOMC, and we've quickly reclaimed that, and we are now above it. So we are definitely in the make or break land for the bears in terms of just positioning on the bigger chart. Yet again, we're so overextended, so overbought. I'm not too concerned that we're going to get a big squeeze higher, because what have we been seeing? We've been seeing that huge squeeze higher. So it's really now about keeping in mind our key levels, which you'll see on that warm-up document, and watching for those opportunities. So intraday, as you'll see with my trades, I'm still just following the bull trend, looking for those good setups. Intraday, the trend is definitely your friend, obviously not just intraday, but there's no need to try to get cute in timing the top in this market. There's plenty of opportunity to be had just going along with the momentum until it fails. So we will see what happens around this trend line and around the key levels you'll see on the next slide. Yet, despite the overextension, again, as you'll see in the next slide, we are in that setup 5. We are in imbalance, and we have not found a new balance yet. I expected it to be around 44.40 on the new ES contract as ESU, yet we are now at about 44.51 and still going. So we have completely cleaned up the TPO. That 44.3650 was the final naked POC, and so now it's really looking just for that reversal. And we'll look for some potential levels to watch as time goes on here. So starting with the warp document, let's just talk about what happened today. So you saw that really large rally after the close yesterday. The NQ, I don't know exactly how many points, something like 50 points, I think a little more even, we saw in that extension into the after hours. Then you saw that unwound at night, and we actually created that down in net short overnight inventory. When you're in a bull market like we are in, you often see a very quick unwind of that counter trend inventory, and you saw that today. In fact, we had an open drive in the ES where we just hammered higher. We opened and we didn't really look back. We did a little bit of a consolidation around that opening price, and then we just hammered it higher. So right now, we do have that trend look. It's characterized by that big VWAP movement, yet you're not seeing it in the TPO itself. In fact, let me just peek over here at the chart because I put these slides on about 15 minutes ago. Let's see what's going on here. Yeah, in fact, you're seeing a double distribution kind of developing, if anything, on that TPO. So not necessarily looking for that rotational movement quite yet. Yet again, when you have that wide IBR, you do not have the internals telling us that we are going to be hammering higher. I think it's fair to look for rotations as day goes on here. Once again, we haven't seen it. In fact, we just put in a poor high as I'm talking to you right now. I see we just put a poor high on the TPO. So watch around high a day what happens. We may just bounce from here and keep going. Yeah, watch that poor high of day. And we do have that double distribution look, so I'm going to update that in the warm-up document before moving forward. So I do keep this document updated as the day goes on when I'm around. Yet once I finish with these briefings, finish with my trading, I do move on to other things. Today we will have that nice little Twitch set for anybody who wants to hang out and hear some lovely electronic music. We're going to have that going on, but then after that I'm going to be pretty absent from the market side of things until the end of day review. So in any case, you can see right now we are way outside the expected move. We have an outlier if SPX can pop above that 44.12 area, and we are very close. We're at 44.06 right now, so watch that for that outlier move. Pretty crazy to see an outlier move. I think this is the fourth trend day in a row, really, or at least we've been extending for really since Friday now, and yeah, so we're near that outlier on the SPX. Watch that very closely, and also watch the levels that you can see there on the warm-up document. So you can get this document as well as the slides by just popping into the description of this video and following the links. That routine trading folder has the briefing slides, and that warm-up document is right here. So that's what we got going on there. So moving forward to the actual price action, this is just what I did today. Really nothing fancy. If I was looking at my 15-minute chart, as soon as we looked like we were going to pop above that trend line, I hopped in. We did have a brief pullback, yet I do let these trades run a little bit until a 15-minute reversal candle shows, and you can see that as well, by the way, in the link, the routine day trading document. You can see the candles I'm looking at to dictate where I do stop out. So very simple. I hit that first target, which is just to lock in the amount of profits I like, added the extra contract for the extension, and got a nice little payment on the runner too. So really simple, straightforward day, nothing really too much to talk about there. So we're going to start with looking at this weekly chart. So the main thing going on in this weekly chart is, so first of all, major resistance is about 440. We're slightly above there in the SPY, so we have to up that to 441. In fact, I will do that in the warm-up document as well as we're hanging out here, and you can see that major support is really 416. So that's on the weekly. That's a lot of points in between 416 and now 441. So I'm gonna go ahead and change 440 to 441. Yet that's why we have the daily chart. So before moving on to the daily chart, let me just update that double distribution as well. Before moving on to that daily chart, I want to bring your attention to that 428 area. Remember, as I talked about extensively in the last briefing, and as I will talk about forever, the easiest way I think to read markets, if you're the closest thing that we really have to a crystal ball, I think are these 5 setups relative to that volume profile. So as mentioned earlier, we are in setup 5. Setup 5 means that we have entered imbalance, and we're looking to see what happens on a retest of the top of that value area. So looking for either setup 3 or setup 1 type of look. And that's just kind of what we're waiting for at that 428 area. What's pretty interesting to me is that 428 area also aligns with the retest of that 4 sigma VWAP. So when we move on to the daily here, I'm going to reiterate what's going on with that 4 sigma VWAP and why I think we're definitely going to at least test 428 fairly soon here and potentially have a much steeper correction. So I did call the top, or I said the top is nigh, I should say, on Friday. So I'm still standing by that. Nigh definitely gives the price plenty of room to run before confirming. And I think that the top of this initial run is maybe in already today. Today may have been the blow off, if you will, but maybe not. We're just kind of watching and waiting. Yet I do think there's going to be a steep correction. Again, not so bearish as some of the my peers on Twitter who feel that we're going to revisit those October 13th lows, but I would definitely expect revisiting at least that 412 area, which you can see at the bottom of the chart, perhaps a lot lower. As you'll see, there's a lot to correct on that TPO. So that's what we got going on the weekly chart. Daily, you can see that trend line that we kind of had that doji from yesterday. Now we're seeing that extension. We are above that trend line. We're above that yellow line, which just was the resistance when I put these slides up. So we're at that 441 area. We're well above that trend line. The first sign of trouble for the bulls is going to be a reclaim of that October 13th trend line. So just draw it yourself. It's really simple. Pull up a SPY chart. October 13th along from that swing low all the way along the other swing lows, and you'll see it's pretty trendline 101. I think anybody who's been trading for more than 14 seconds can figure that out. And so I'll be watching what happens at a reclaim of that trend line. So another notable element of this chart, and I said I talked about, is that 4 sigma band. So if we just fast forward or flash forward, either I think works here, and look at this chart. This is from the prior routine briefing. You can see what happens when we get extended beyond that 4 sigma VWAP, and we're now 5 points higher from this. So that extreme overextension is now to the point of comedy levels, nosebleed, whatever you want to call it. I don't really care who you are. You're crazy if you don't think that we're overextended. I would expect Goldman and Bank of America to probably be buying the top here as they usually do. Yet we have entered la la land by any stretch of the imagination, and it becomes really apparent when you look at our relationship relative to that 4 sigma VWAP. So that's why long term I'm definitely looking for a strong short entry. Long term, again, I think it's very possible we have entered a new bull market. I believe the probability on that is well above 90%. I think it's like 94% or something, based on all the various things that have happened, that we are in a new bull market. I do not deny that. However, I do think, like I said, we're looking at a potential move to at least 412, I think, on a correction. Definitely 428, but that's not far enough, I don't think, to reflect what you usually see, again, when you have these 4 sigma VWAP breaches, especially with the extremity of this one. So we'll see what happens there. Let's see, anything else on this daily chart? Oh yes, so there's that first gap at 423, again aligns with the 4 sigma VWAP on this chart. So I'd say 428 first test, 423 very possible support before a move higher. Kind of looking for those ABCD type patterns. Again, if you go to that routine day trading document, you can see what I mean by that. Look at those little patterns that I show. Those are helpful very much intraday, but also obviously on a long-term basis as well. So that is the gaps. There's more below, but just since we do these briefings pretty much every day, the first one there is at 423. So again, this is my key chart right now. Obviously, we're at 441, so it's the updated version, but just the overextension of the VWAP relative to what always happens. If you look back farther in the chart, it always happens. There's a significant correction when you get beyond these 4 sigma VWAP. So hey, maybe this time's different. I would bet at least a finger, probably an arm, that it's not. Yet, who knows? Who knows? Especially with the strength of the market, pretty much since anybody of my generation has been born. We haven't seen many bear runs at all. We've had a little bit of action in that 2008 and maybe 2020 for about 3 weeks. Yet we still, even in those big bull markets, we do often correct. Or excuse me, we do always correct when we get this far beyond those VWAPs. So that's what's going on that daily chart. Just moving on that TPO. Where's balance right now? So this is the shorter term. I'm going to flash what I showed on the last briefing as well. Shorter term, we are balancing around 44.20. Thank you for joining us, Mr. Juiceball. Nice to see you in the chat. I don't know if you heard the first part of that briefing, yet we have entered the comedy land, I think, in the overextension. So I'll be interested to know how you, as the Queen Bullcastle or whatever you call yourself, feels about that. In any case, right now, current balance, I'd say, is about 44.20-ish, 44.20 to 30 if you want to make it a range. Yet when you look big picture, once again, just like I showed you on that daily chart, you have the ugliest of structures. And again, this is from the prior briefing, so that 3650 level has now obviously been cleaned up. So yes, short term balances around 4420. Yeah, looking big picture, as with that 4 sigma VWAP, when you have this amount of ugliness in the TPO, this is the ugliest TPO I've ever seen, way uglier than anything we saw even in 2022 on the downside. You have some type of corrective action. So where are we going? I'm just watching those key SPY levels, yet the odds definitely favor some type of corrective action based on this and the VWAP. So again, I want to reiterate, intraday, I have pretty much only done long trades with a couple short scalps. Yet looking out, big picture, I would not sell puts with your money right now, or anybody's money for that matter, as we wait to see what happens when we at least retest that 428 area in the SPY. So the first signs of trouble for the Bears remains to be this VIX chart. This looks very similar to the one you saw the other day because we actually haven't moved in the forward/VX despite the significant move in the market. Speaking of significant move in the market, we are making a run back at that high. So remember that 4412 SPX level is that outlier level. I think I'd have to check the math on it, but we only breached that outlier level 0.5% of all trading days. So just wild. We by breach I mean close above it. So watch what happens there, 4412. So anyways, back to volatility here. First sign of trouble for the bulls is going to be when we can hold above 1740. I think that's when we make a move toward that gap. And then once we make a move toward that gap, we have another gap higher. Yet this chart is really not significant right now. I'm not looking at it too much. I'm just kind of watching three key levels, being that the low, 1640, 1740 for a possible break above, and that first gap. So in terms of volatility, it's really pretty simple. That's probably the simplest chart on the board right now. So as I'm looking at the internals here, by the way, we are moving a little bit more toward that trendy look. So confirming that double distribution mentioned earlier in the briefing here. Watch that 50, if you look at these internals, I'm talking about ADD and VOLD, particularly ADD, watch that 1500 area. And if we start to keep trending above that, just a crazy move. I got trailed out my NASDAQ at 15,247 and we're almost 100 points higher. Astounding. Okay, so a little bit of a macro taste for you. Again, I don't like reading these slides, so you can check them out by just going and reading them yourself. These are from that Tier 1 Alpha newsletter. I just pull what I think are the most important takeaways from it today. There's really only two, so this slide is particularly interesting. This would be the bear case of things. So big picture, I think the most important thing to look at is that last sentence. These are far from friendly skies. There's a lot of other things going on. I think this slide's just a good little bear case, despite the irrational exuberance that we have going on here in the market. Again, doesn't matter day to day, yet big picture, we still are out of the woods. But bull case, big picture, breadth. We talked about breadth, or I've talked about breadth a lot as we've been marching higher here, and we haven't seen it come up. And you're now seeing that kind of happen. So in terms of breadth, the mega caps actually are taking a break as everything catches up. So we are seeing an increasing number of stocks reaching those new highs, less stocks, in fact, like no stocks, hitting those new lows. And as the mega caps move higher, everything else is starting to move higher as well. So breadth is becoming much cleaner as the rally persists. That is the macro bull case I have against all the bearish things going on there. Another bearish thing I mentioned earlier in the brief, I just want to bring it up. When you have Goldman and Bank of America getting super bullish, that usually is a sign of an incoming crash, possibly of 1987 levels. So we'll see what happens there. Okay, so that is all I have for you today. I will follow up with that newsletter shortly just to package everything up nicely. And as mentioned several times throughout this video, you can see all my resources in the description of this video. As we have Mr. Juiceball, the dog looking for a squirrel. My mic turned off as I was trying to roast OJ, the dog looking for a squirrel in the chat. I would still appreciate any thumbs up from anybody who's watching this because that does help with the YouTube algorithm and our quest to sustain double-digit views. So I also appreciate any engagement in the comments themselves or on Twitter @RoutineTrader, where you can find me most days. So I thank you for your attention. I will see you tomorrow to wrap up the week. Quad witching, probably going to be another fun one. So stay classy until then.